Hey everyone, hope you're well and thanks for joining me. So this week has been an interesting week, especially if you've been following some of the GameStop news that's going around at the moment. It's got a lot of hedge funds on the run and they're now screaming for regulation, so that will be an interesting story to touch on. But besides that, I thought I'd also look at some other smaller stories that may have flown under your radar. Hey everyone, thanks for sticking around. My name's Ben and today we're going to go into what I'm uncreatively going to call Stock News Episode 3. So grab yourself a drink, pull up a seat and let's go over and see what's been in the news. The first story is around issues that have been caused from COVID-19 that people aren't necessarily recognising. However, this does have an impact on stockholders of Altria. It seems that looking at tobacco sales records from Altria Group, that this is the first year in the last decade where the sales haven't decreased. This implies that all the people that are quitting smoking are either being replaced by new smokers or smokers that already are smoking are doubling down on their smoking. This would imply that customers are having a difficulty in actually reducing smoking and quitting during the COVID-19 period. There is the high likelihood that this has increased for people already smoking as they find a lot more free time at home now that a lot of people have moved to home working situations. And obviously, while that is not good news in any sense of the imagination, it is everyone's choice for what they choose to do, and if people want to smoke, that is their option. So we'll put our shareholder head on and we'll look at what we can find out from this. From shareholder standpoint, this is good news because it ends the decade-old trend of the sales going down. And Altria Group have also announced a share buyback scheme worth around $2 billion. This announcement caused a 3% jump in the share price before it slowly dropped back down to where it was beforehand. And it's interesting to know that they are looking to do a share buyback. Now, let's jump over to a little bit of news from Associated British Foods. We have a quick update about the chairman who seems to be selling some of his shares. The current chairman, George Weston, sold over 800,000 shares, leaving him with 430,141,621 shares remaining, which is still a ridiculously large number. If we take the shares that George currently holds and works out what he would get as if he was being paid the 2019 dividend again this year, George would then be pulling in a tidy £193 million based on the 2019 dividend information. So that's good news for George, and he can buy himself plenty of Coca-Cola coffee. What's Coca-Cola coffee, you ask? Well, stick with me and find out. So Coca-Cola coffee was an interesting story I came across, and I thought I'd share it because I know a lot of investors do invest in Coca-Cola. It seems for the American market, Coca-Cola has released 3 different versions of Coca-Cola coffee. We have vanilla, caramel and dark blend. In a recent press release, the director of Coca-Cola said many people are torn between having a coffee or a soda in the afternoon, at work, school or when they are travelling. It seems that the retail price of these cans are going to be $2.32 for a 12-ounce can which contains 69 milligrams of caffeine. I can see the potentiality of this kicking off in America. I know there are a lot of coffee drinkers all over the world, and partially I'm quite interested in these and would like them to become available here. So if anyone gets hold of one, if you wouldn't mind letting me know and sending it my way, that would be brilliant. It'd be interesting to see the sales reports of these products once they've been out for a while and how well they've been taken. But let's move on to a more interesting story, or potentially the most interesting story of this week, which is GameStop. So this one's slightly out of the ordinary for the ones that I normally feature in my videos, only because it's not a stock that I hold. However, due to the recent press on it, I have learned a lot about it and thought it'd be interesting to share for you. So yes, I'm going to briefly touch on GameStop. I thought there's a little bit of information in there that might be interesting to you, and just a quick breakdown of what's roughly happened. I'm not going to go into too much depth, and there are a load of videos out there currently that do have the information as well. So for anyone that's not aware, essentially what's happened is a group of hedge funds have actually shorted a company called GameStop. Generally, this isn't too bad. A lot of companies do this and a lot of individual investors do this as well. The issue here is that the hedge funds, including Melvin Capital, had actually shorted over 100% of the stock, which left them vulnerable for a short squeeze. What these hedge funds were doing were loaning out shares with the intention of buying them back later at a cheaper point and then being able to net the profit. The good thing here is if the shares do go down, you manage to net a fair bit of profit without losing much money. However, if the share price rises, you are essentially paying back a higher price than you would be when you were originally buying them. So you would be buying them initially for £10 and then rebuying £15 to pay them back. I'm not going to go into shorting fully here because it's a video that I'm going to make in the future, so please hit the subscribe to keep up to date with that. These hedge funds have eventually shorted over 100% of the company. What then happened is a user on Reddit found out and started buying up the shares and renounced on Reddit what he was doing for everyone's interest. People saw what happened and seen that this is a benefit to cause a snowball. Whether intentional or not, this caused a short squeeze on all of the hedge funds due to them over-positioning themselves, and this has caused massive ramifications and costs to those companies. When the retail investors started buying into this company, it raised the price of GameStop as you would expect. This then forced the hedge funds to close their positions or be forced to by their brokers due to the losses. In order to close their positions, because they were short positions, they then had to go and buy the shares that they then owed to the broker. This then pushed the share price higher, which then caused other hedge funds to do the same. This then caused a snowball, and this then led to a higher share price. This caused GameStop's share price to rise from roughly $20 up to $325 as of the close on Friday. Unfortunately, this happened to a load of hedge funds who in total lost $19 billion, so now they're kicking up a fuss because they've lost some money. I have seen various posts asking for different things, some of which are even asking to restrict retail investors to limiting things such as indexes, because we shouldn't be making the decisions on what companies we buy into. All I can say is it's interesting to watch, and it'd be interesting to see how far GameStop can actually rise up this ladder. So that's the end of the news section, and we will be moving on to the portfolio shortly. I have of course added all of the links below, so feel free to check them out, and please remember to like and subscribe if you've got this far. Now let's move on to the portfolio update and see what changes there's been in the last week. So in regards to the portfolio, there hasn't actually been that much change. The main difference is that I added some additional funds because I got paid over the weekend. Currently, my portfolio is sitting at £2,072 with a return of £28.40, which is 1.39%. That is in total a drop from last week of 4.01%. By the way of trades, there was only a few ones that I made. I did end up selling 20 of my 40 shares of Cineworld and managed to net a couple of quid profit on that. But I then used that to invest into Omega Healthcare Investors, which I bought 0.7 shares of for £18. Then I picked up one share of ExxonMobil for £32. and 0.8 shares of Chevron for just shy of £50. If we move on to dividends, there was 3 total payments that came in last week. The first one was 45p from Cisco Systems for holding 2 shares, followed by 36p payment from Games Workshop for 0.6 shares that I held at the time. And finally, Simon Property Group paid out 16p for 0.2 shares. I'm thinking of doing a January update to go over all of the changes, income and everything in more detail, but do a full video of it. And I'm planning to do that next Saturday, so let me know what you think and anything you want me to include. I will be looking to add some useful information into that as well, including things like upcoming dividend dates and ex-dividend dates for people who'd be interested. But hopefully the changes I've made to my portfolio this week should result in a rough increase of £7 to my annual dividend income. As always, if there's anything you thought I've missed that's gone on in the news, if there's anything that you think I should see or any stocks that I should look at, please do comment below and I'd love to check them out and we can have a chat about them. And thank you for sticking around this long, and if you wouldn't mind liking, subscribing and leaving a comment below, I would be grateful, and potentially sharing this with anyone you think might appreciate it. So that's all from me. Thanks for sticking with me, and I hope to see you next week. Have a good one.